So I heard that you don't know how to read a loan estimate. Well, today's your lucky day, because in this video, I will be breaking down each section of the loan estimate, and I'll explain the impact that each section will have on you as a buyer. Welcome to my channel, The Home Loan Expert, where I discuss all things mortgages. If you have already subscribed, welcome back. If you are new here, don't forget to subscribe and check the notification bell. That way you don't miss informative videos like this one that could potentially save you thousands of dollars when shopping around for a mortgage. So in today's video, we will be discussing, drumroll please, you've guessed it, the loan estimate. And with that, we will be discussing what each section of this vital document means to you as a buyer. So without further ado, let's jump right into it. A loan estimate, or LE, is a 3-page disclosure that you receive within 3 days when initially applying for a home loan. An LE's purpose is to lay out and disclose all fees in a real estate transaction as it relates to the cost of borrowing money. All lenders are required to provide you with this document as required under the Truth in Lending Act, which requires all lenders to disclose information about all charges and fees associated with a loan. Now, with that being said, not all loan types require a loan estimate. So if you are anticipating receiving an LE, but you haven't, just make sure to follow up with your loan officer to see if it's required for your specific loan type. But if you are just doing a regular purchase transaction to purchase a primary residence, an LE should be required. So starting at the top of page 1 and moving down the left-hand side, as you can see on my screen here, this portion shows you the date that the document was issued, all of the applicants on the loan, the property address in which you are purchasing, and then the sales price of the house that you're purchasing. And then as we move over to the right side of the document, this column shows you the loan term you are applying for, the purpose of the loan, the type of product, whether it be a fixed rate or an adjustable rate mortgage, the loan type, the loan ID, and if your rate was locked or not. If the rate was locked, this section will also show when the lock expiration date is. This essentially just tells you when the loan needs to close by to avoid incurring any other additional fees. I will be doing I'll be doing another video explaining rate locks in detail. So if that's something that interests you, make sure to subscribe to my channel and turn on your notifications. That way you don't miss that one. Next, as we scroll down page 1, note the section labeled loan terms. As we scroll, you'll see that this section includes your loan amount, your interest rate, your proposed monthly principal and interest payment, and if there are any prepayment penalties or balloon payments. So definitely make sure that this section is correct and reflects the type of loan that you are looking for, because there's nothing worse than, thinking that you have a fixed rate loan and then 5 years down the line, you get smacked with the balloon payment, and now all of a sudden your whole, you reach maturity and the whole loan is due after 5 years and you weren't prepared for that. This is a real situation that I'm talking about right now. So definitely make sure you're paying attention to this section. So moving further down the page, the next section is called projected payments. This again just shows your principal and interest payments along with your mortgage insurance if you have any, as well as your estimated payments for taxes and insurance. The last section on page 1 is called cost at closing. So this section shows your total estimated closing cost, as well as the amount you need to bring to the closing table, essentially, which is typically referred to again as cash to close. You guessed it. So here we see on page 2, the section called closing cost details. Each section here is labeled with a letter between A and J and will give you a breakdown line by line of the fees associated with each section. So here in section A, it shows origination charges. This would include any discount points that you may have paid to lower your interest rate. Your loan officer compensation could be listed here if it was borrower paid, which in some cases it has to be in order to pass QM, but that's a whole nother topic. But if you would like me to address it more in detail, just let me know in the comments below and I'll definitely make another video addressing QM. But all in all, any fees that has to do with the origination of a loan, like underwriting fees, processing fees, or application fees, all of those fees will be included in this section right here. So moving to section B, this section shows services that you cannot shop for as the consumer. Pretty much, this just means that all services listed in this section cannot be shopped for or secured anywhere else. These fees generally tend to be the same or similar across the board, as lenders get to choose which companies are used to perform these services due to a multitude of different risk factors. Let's see, examples of these types of fees can include an appraisal fee, the electronic registration fee, or otherwise referred to as the MERS fee, the flood certification fee, or any tax service fees. Section C, on the other hand, shows services that you can shop for. This includes any fees or services needed on the loan that your lender has estimated based on the cost from the service providers or preferred companies they usually work with. However, you as the consumer can choose to shop around for or secure these services for yourself. An example of this type of fee would be a title related fee, right? Because you as the borrower have the right to work with whatever title company you wish. So if you've ever worked with someone who said you have to work with this title company in order to get this loan to work, that is an outright lie, because you do have the right to work with any title company that you want. However, typically what I see happen is you will have, title companies will, offer incentives, for you to work with them. And then it is your choice, whether to take that incentive. I mean, hey, take it if it makes sense. But, I just want the main point that I want you to take away from this is that you do have the right to choose to work with whatever title company you wish. So section D reflects total loan cost. This section just shows the sum of the cost outlined in sections A, B, and C added together. That's all the section is. So now let's move to the right side of the document to talk about section E. So here in section E, it just shows taxes and other government fees, which includes essentially just what it says. Any taxes or government fees, such as, let's say, for example, recording fees or transfer taxes, will be included in this section. So section F is called prepaids. This shows any taxes or insurance needed in order to close your loan, such as your homeowner's insurance premium or prepaid interest. Moving to section G, this shows your initial escrow payment at closing, which is the amount you as the borrower will need to set up in an escrow account if you choose to have escrows. But just keep in mind that some lenders will require you to have an escrow account if you borrow more than 80% of the property's value, aka all that means is you put down less than 20%. So in a nutshell, if you put down less than 20%, certain lenders may require that you have an escrow account. So section H covers other, which is any other fees that may fall outside of the previous categories listed previously. And lastly, we have section J, which sums up the sections D and I added together, along with any other lender credits that may have been given to you by your lender. A common example of this nowadays can be, if you took a higher interest rate, sometimes lenders will compensate you for that by giving you a credit that you can use to apply towards bringing down your closing cost. So if you did something like that, that fee would be listed here. This section also outlines your total closing cost as it accounts for all fees in each section of the loan estimate. So now in the bottom right-hand corner, you will see a calculation of how much you will need to bring to the closing table, or in other words, your cash to close, which is the same thing you saw at the bottom of page 1, but it's just a little bit more of a detailed breakdown. So with that being said, now let's move on to page 3, which shows you additional information about your loan. This section includes the lender's information and your mortgage broker's information if you decided to work with a mortgage broker like myself to help get you the best deal possible. But if you didn't work with a mortgage broker, then the mortgage broker section would be blank. Moving on to the comparison section, this section just shows your interest payment information, such as how much you will have paid in the first 5 years and how much of that goes towards your principal balance. This also shows the loan's annual percentage rate, or APR, and the total interest percentage. A key thing to note here is that the interest rate and an APR are not the same thing. In this section, it is referring to the APR, which takes into consideration the interest rate, but it also includes all the additional cost of the loan over the loan term expressed as a rate, which is why an APR typically will always be higher than the interest rate because it accounts for loan cost. I will be making a video going into further detail about this, so definitely subscribe and turn on the notification bell if you would be interested in learning more about that. Moving on to the other consideration section, this section doesn't really show any costs, but rather it's just a list of items a borrower should be aware of as it relates to a mortgage transaction, including the appraisal, assumption, homeowners insurance, late payments, refinancing, and loan servicing information. So definitely make sure you read this section and thoroughly understand it, because if you don't, just make sure you ask your loan officer. And the bottom line is your understanding of this document is crucial, and it's a huge investment for you as well. So definitely make sure that you don't proceed without definitely understanding everything that's in this document. Then at the bottom of page 3, this is where you need to sign and date acknowledging that you have received and understand the loan estimate. But again, I'm just going to caution you here. Please do not sign the loan estimate unless you truly understand the information in the document. If you need a second opinion, I am always here. So please don't hesitate, to reach out to me, and I will look over your loan estimate for you completely for free. But I definitely am a strong advocate for consumer education. So if you're not getting the answers that you need, definitely reach out to me, and I will make sure that you truly understand it before proceeding. So hopefully this video helped you understand loan estimates a little bit more, but if you're still confused or you have some more questions, please feel free to reach out to me either in the comment section below, or you can reach out to me directly at the phone number and the email address listed on the screen. So if you found this video helpful, please give it a like and subscribe and turn on notifications for more information regarding all things mortgages. See you in the next video.